Unlike previous examples of stock charts, after an IPO, there is less clear and stable price action available despite a rapid recovery from an initial drop. This leads to a situation where a fib projection is much more suitable than a fib extension. For quite some time after the IPO, a fib extension is more practically applied when a clear retracement develops in May. As a downtrend progresses, there is an immediate retracement to reference for a fib extension after the evening star formation is confirmed. The initial base trend and retracement end up producing suitable distances between fib extension levels since price fluctuations don't substantially widen as the volatile downtrend moves lower. As usual, there is stronger opposition around the 1.618 level, which is also near the more significant IPO price range. Despite this, there is a break lower, with general descending triangle price action to end 2015. A similar situation could have taken place at the 2 level as well. This is why it is once again important to watch short-term developments closely in the broader context regardless of the fib level that is contacted. A fib projection from the small initial downswing produces similar results but is less precise, with the upswing in late August 2015 around the 2 level. Even if a different fib level or technique was used, basic technical analysis referencing the IPO range would make up for the shortcomings due to the sharp upswing. The downtrend and recovery off new record lows allows for the suitable use of a larger fib retracement and projection to capture later reversals and retracements. The projection levels are also helpful at a later peak in new record high ranges, despite increased volatility into 2021. This is mainly due to clear swing points and wider proportions present in the fib retracement range. A fib projection based on the boundaries of the flat bullish reversal range is sufficient in capturing the approximate areas of the 2 major volatile downswings in 2018 and 2019. However, the previous variant based on a large fib retracement was more suitable given the bullish and bearish accelerations after the bullish recovery began to steepen towards mid-2018 after leaving the horizontal range. Using the clear swing points from the larger fib retracement in the recovering uptrend for a wider range was another alternative. Normally, once there was the dip to record lows in early 2020 under the 0 level at 40.67, it was appropriate to move the fib retracement and projection to cover the larger downtrend that also had clear swing points.